Alrighty, guys, we are live. Yo, 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 yo. What's up, everybody? My name is Juwan Rohan with the Misguided Podcast, where we intend to guide you to a better future. I'm sitting here with Mike Morawski, real estate investment veteran, coach, trainer. He does it all, and I'm excited to sit down and chat with him. How are you doing today, Mike?
I'm good, Juwan. How are you, man? Great, great. We finally connected. I'm glad that you're having me on.
Yeah, I appreciate it. I just appreciate you responding. Sometimes I'll like shoot my shot at some business owners and people that are like really big time, and then they'll respond, and I'm like flabbergasted. like I'm just like, whoa, okay, cool. I was not expecting that. Actually, just happened last night, and so it's interesting, getting to network, and I love that aspect. So thank you. I'm excited to interview you. Have an interesting story. I like to tell my audience how I found you and how I
Mhm.
found the people that come up here. So, just so my audience knows, I found you on the Kathy Fedke podcast, where she interviewed you. It was kind of in a critical moment as the real estate market is changing. You came on and told her, how you built this big empire, and then it all fell, the reasons it failed. And I was like, I want to learn more about that. And so I immediately hit you up, and you responded, and I thank you. So that's how I found you.
Yeah, cool. Thank you. I appreciate it. I appreciate you reaching out. That's for sure. Hey, more important than me, I'd love to hear more about your basketball background.
Yeah. So the audience knows, but I played college basketball. Kind of basketball is my tunnel vision for a long time, which is why I felt so cheated from financial literacy. But I played college basketball in Colorado. You can see the jersey right here behind me. Also a USA jersey. After I graduated, I went to like four different countries and played for about 2 weeks. It was probably the best experience of my life. Like they treat you like superstars over there, so
Yeah,
it was amazing.
good for you. Good for
Yeah,
you. How come
thank
you
you.
never pursued it?
So I'm 5'9". I know you can't
Oh,
tell right now. So I'm 5'9", and then I didn't have the college run that I should have.
hmm.
And so yeah, that all that goes into play. And then yeah, I just like I could have chased, obviously not the NBA. I could have chased playing overseas, which was my goal actually,
Yeah,
because I really wanted to live overseas. But then I started looking at how much they make, and I was like, I can make way more back home, like So it just didn't make sense to me.
yeah, good. Thanks for sharing that with me, though. I appreciate it.
Of course.
We all have tunnel vision about something, right?
Yeah,
So,
we definitely do, and that's the thing is like there's so many there's so much out there, and I just spent most of my life focused on basketball to where it didn't become fun anymore. It became a job, right?
yeah,
And so that's also why I was mentally tapped out senior year, like before the season even ended. I was mentally tapped out. So yeah,
yeah.
let's go ahead and get into your story though. Where are you from, Mike?
I'm from Chicago. Been here my whole life. Grew up in the suburbs. Today I live downtown. My office is downtown, and I, there's other parts of the country I've been to, but one of the sayings here in Chicago is, if you can't build a business here, you can't build one anywhere. So a lot of
Mm.
opportunity here.
Yeah, nice. So is that why you stayed in Chicago? Have you ever lived anywhere else before?
No, but traveled a lot. Haven't lived anywhere else, but spent a lot of time on the West Coast. Southern California.
Okay.
Not too much up by you, but
Yeah.
um, been around a lot. But I guess I've always been in Chicago because this is really where my family is. Right. I have 5 kids, and they're all grown now. So next couple of years we'll probably move from here somewhere out west. So.
Okay, nice. Well, Mike, you have an interesting background in real estate, so I know there's a lot, and we are on a time crunch. I want to go ahead and dive into real estate in your introduction. So, how were you first introduced to real estate?
Yeah, great question. So I was in the construction business. I had a general contracting business, pretty successful. I was building 20 to 25 room additions a year. And like any entrepreneur, and this is a point I always like to make is as an entrepreneur, you tend to do everything. So you do the marketing, the sales, the hiring, the firing, the ordering, the bookkeeping, and then you dream about it all night while you're sleeping. And I was so busy. I was doing all that and still banging nails in the field. I woke up one morning and I vividly remember sitting up next to my wife at the time and going, man, I'm burnt out. I can't even do this anymore. And I was fortunate. I had somebody knocking on my door to buy my company. So I sold it and sold the company and took a year off. And again, being an entrepreneur, you never take time off. We wound up house hacking a couple of houses, where today it's the sexy thing to do, but back then it was, not people didn't do it.
Yeah.
And, but we lived in one unit and renovated the other. And I met a real estate agent along the way, though, and this is the interesting point. I had heard Jim Rohan, motivational speaker, years ago say that success leaves clues. And that was one of those key points that just always stuck with me. And I met this real estate agent who was really successful and went to him and said, hey, I'm thinking about going in the real estate business. And he said, boy, I think you'd be great at it. So he encouraged me to do so. And I went back to him and said, hey, I'd like to shadow your team and follow you around. And he said, no, better than that. I'm going to make you a cassette tape. Now, this is, Juwan, this is a long time ago.
No, right? Yeah, no, there's a couple of people who don't know what that is. I do, though. So,
yeah. Well, you might not know what a cassette tape is today, but much less being able to find something to make one.
Yeah,
so,
yeah.
But podcast is the same thing because you can go back and listen to it over and over. And that's what I did was I listened to that over and over again. And I took those fundamentals that Todd taught me on that tape. I went in the real estate business. My first 9 months in the business, I sold 78 houses. Didn't know anybody. I worked my tail off. The next 12 years, I built a team. We sold over 125 listings a year as a team. And I gave all my buyer business away, which is a story for another podcast. But I built a pretty successful real estate sales team at that time.
How many were in the first month? The first year, sorry.
78 in my first 9 months.
Oh my God. Okay. We're going to take a little break because I want to get into this. So I actually am a realtor in California. And when I started real estate, my goal was, I could help people, help them understand real estate, educate them. Like that was my main goal. It wasn't like I'm going to be the top selling agent. So when I started, I actually went with a startup company that was kind of introducing new ways on real estate. And they actually paid me salary and I got bonuses. So there was like pressure to sell, but not as much. I like that because what it allowed me to do was focus on my other 5 different businesses, and which is my main, priority. And so I haven't mentioned this on the podcast yet, but I actually just got laid off this week, 2 days ago. So the company is pretty much going down. They laid off 60% of their people in the last 4 months. They did one in July, and then they just did one Wednesday where they laid off 40%. So it's been pretty crazy knowing that now I'm going with another brokerage next week, but it's commission. So I'm going from salary to commission, right? And it's like a huge change for me because I have my other businesses paying me, but I have a family, so it's like I'm trying to get myself mentally prepared. So do you have any advice for me and then for my audience as well of how'd you get to that? How'd you feel about that 78 in that first year? Like that's crazy.
Yeah. So I learned early on how to prospect and how to go out and knock doors and make phone calls. And I spent the majority of my time helping FSBOs get their homes sold on their own. So, FSBOs for sale by owner.
Yep.
This was, when they're, and I don't know what the residential market is like for that business today, but if the for sale by owner market is out there today, and you go to them, we're in a changing market. And that's something right now that we've come out of this really robust time for the last couple of years. Now we're coming down in the valley. Houses are going to be on the market a lot longer. It's going to be tougher to sell. If you can design a plan, design a program to help those people that want to sell faster, you're going to do a lot of business. So my whole business was for sale by owners back then. I knocked on their doors. I helped them do open houses. I put together brochures for them. I got a lender to put rate sheets together for them. We did all of this, just traditionally organic stuff. This is you're coming into a time right now in the real estate space where it's got to be totally organic. You know, as much as you can be on social media and get people to like you, love you, and trust you, you still have to be face to face, belly to belly with these people. And
the key is guerrilla marketing. I love that, and it's so overlooked in today's digital world. Like guerrilla marketing really works well for me. I'm still, I'll take my dog on a walk and pass out my real estate flyers.
Yeah.
And so I really truly believe in connection, human connection.
So here, let me give you some quick tips. I learned 6 basic questions when I got in the business. So I would get on the phone and I'd call people, and let's just say I was cold calling, and I would say, "Hey, this is Mike from ABC Realty. I'm doing a quick survey in the area. When do you plan on moving?" You always ask questions where you're not going to get a yes or no answer, but you engage a response, right?
Yeah.
Because you engage a response to try and build a relationship. So I'd ask, when do you plan on moving? How long have you lived at this address? Where'd you move from? How'd you pick this area? If you were going to move, where would you go next? And when would that be? Somewhere along the line, people say, "Oh, well, we're going to move next year or 6 months." But I just built a bank of potential upcoming sales. And, it just started to flow from there. But, if you come from a space of contribution where you're giving back, you'll do fine.
Yeah, I agree. I think I always like I don't know how the phrase goes or whatever, but before you ask for something, give. And so, when I'm meeting people, I always say, how can I help you before I ever ask for anything? And sometimes I won't even ask for anything, and it always just comes back tenfold. So I truly believe in that. That's great. Cool. I want to move on to your private equity firm that you started. I believe it was in 2005, right?
Yep.
Okay.
Good.
You want to talk about that?
Yeah, sure. So 2005, I was selling about 125 houses a year. Had a team of 7 people. And
oh, you guys were working like crazy.
Yeah.
Yeah. Oof, that's good.
So I saw the market softening and starting to shift, similar to what's going on right now. And I wasn't really sure what was happening or what was going to happen, but I knew that I needed to do something else. Back when I was in the construction business, I'd done a lot of work for a couple of large apartment syndicators here in Chicago. And that's just a fancy word for saying that these groups put together partnerships where people would go buy large apartment complexes, and everybody would profit from them. So I knew that you could go raise private equity, marry it with a great real estate deal, put the two together, stay in the middle. And as long as everything went well, everybody made money. So I went out in 2005, said, I'm going to go in the apartment business. I syndicated my first apartment deal. It was a 11-unit building. From there, I went out and I raised $18 million. I bought $60 million worth of real estate. I built a property management company managing 7,500 units and built that in a 30-month period.
Wow. Okay, I don't even know where to begin because that's insane. Did anyone coach you along the way? Like, how did you know what you were building? Did you have a vision for it before?
I had, the only vision I had was what I kind of told you. I said, I've seen these other companies grow, and they grew because they brought other investors in to invest in real estate. And you bring investors in to invest in a good real estate opportunity, and everybody can profit from it. So I knew how to build relationships with people. I knew how to talk to people, and I knew that if I did enough of that, that I'd be able to raise money. And it got silly back then. People were investing in real estate, and they are now too. I shouldn't just say back then, but it's just a matter of meeting enough people, building that rapport, building that trust where people know that you're going to help them be successful financially.
No, that makes sense. I like to do this thing where I ask quick questions, and when I ask these quick questions, I want quick answers, like 1 to 2 sentences. Do you mind if we do 3?
Yeah, go ahead. Let's go.
These are freestyle. These are freestyle too. First one is, what's the best way to pitch to someone when you're asking for money?
Yeah. So, hey, Juwan, do you do any real estate investing?
I do.
You do. Excellent. Have you thought about doing any passive real estate investing where you didn't have to take care of the tenants' trash and toilets, but you could benefit from profits of maybe 16 to 18% a year? Would that be of interest to you?
Yeah, possibly. Just depends. I don't really trust people with my money.
Yeah, no, I understand. But if I could show you a way that you could create short-term cash flow and long-term wealth as a result of that and continue to run your other 5 businesses, would that be of interest to you?
Yeah, let's talk about it.
Okay, great. So then, we make a appointment to talk about it.
Next question. Do you ever ask for something on the first contact?
Not necessarily. It depends on how the conversation goes, but I always, I always try to come from a space of contribution. What can I do for you? How do I add value to your network? Can I help you with anything?
Nice. What should a contract look like for a partnership?
It should be a win-win. Absolutely a win-win.
Wow, that's a good one right there. It should be a win-win. A lot of people are trying, how can I benefit from myself by not, that's very key. You got to make it a win-win for the other side. I actually heard that sometimes the other side has to win more than you at that time, because what happens is you build a relationship. If they win more on the first one, they might do another one with you, and then you guys win equally on the second one.
Yeah.
It's a win-win all around, right?
Here's why win-win is so important, because if you walk away from a deal and you feel like you got the upper hand, that the other party feels like they didn't get as much. If you walk away from a deal and you don't feel like you got that you got less, then you don't feel good about it either. So both parties have to feel really good about it, because then it helps to make the closing go smoother as well.
Absolutely. Great. I want to talk about that very first deal that you got. Obviously you remember it. It's right. It's like your first girlfriend or whatever. So go ahead and talk about your first deal.
It was actually worse than my first girlfriend. So
oh man, I love to hear it. Let's hear it.
Yeah. So the first deal I bought was an 11-unit apartment building, and when I bought it, I knew nothing. All I knew was I had to go raise some money. I went out, I found this building, I put it under contract. I was so excited. Then I knew that, how am I going to pay for it now? So I knew I had to go raise a couple $100,000 to do that. So I put a little ad in the newspaper that said real estate investors wanted. And I don't think you could even duplicate this today, because there's no newspapers that have classifieds that people read. And
this is almost like I was gonna say it's almost like the bandit signs, but
right, yeah, well, bandit signs still work, but anyhow, I did that first deal, and I didn't do any due diligence. I didn't check into the property. I didn't look at any of the financials. I didn't look at any of the insurance claims or the numbers. And there's a lot that goes into it. But I bought that first deal, and I bought it based on everything the seller told me. Oh, you can raise the rents if you go in and do these repairs, these interior, exterior repairs. If you stripe the parking lot, you refinish the parking lot, you fix the front porch. And, it was, I believed everything the seller said because I didn't know any better. But what happened was when I took that building over, I couldn't raise the rents. I'd do the repairs. Somebody new would move in. They kick a wall in. I'd have to do more repairs. It didn't matter what I did to that building. It was a bag of bricks, and I couldn't wait to get rid of it. But what it taught me was that I needed to find out what I needed to find out. Because a lot of times we don't know what we don't know. And so until you experience it. But I took the active step. I took the action. I bought the deal. I figured out that I needed to put together a buying strategy, sat down with a broker at that time, said, what do I need to know? He told me some things. I learned how to build what made sense for a purchase, for an acquisition. Like today, I only buy market rate rent workforce housing, right? I don't buy upper end A-class properties. I don't buy lower end.
Oh, those are doing so bad right now.
Yeah, right. And that's why, because when the market shifts, they're the first ones to get hurt.
Yeah.
But I buy B-class workforce housing. I like garden style, 2-story pitched roofs in markets where the population growth is high, the job growth is good, the household income is stable and strong, so I can raise my rent. So I look at things differently today. So I bought that first 11 unit. The next one I bought was 64 units, but I was a little bit smarter because now this one threw off a lot of cash flow. Yeah. So we learn along the way, because even what you know today, Juwan, tomorrow you're going to know something different.
Oh, definitely. And I also think like you can't be in the research phase forever. You can take as many courses, read as many books, but you can't just research forever. You have to actually learn by experience. And I preach that all the time. I've never been the type to kind of get stuck in the phase right before you take that first step. But I know a lot of people that are, and I always try and convince them, like, just take it. You're going to make mistakes. Hey, you're going to make mistakes early on, but even as a veteran, you're going to make mistakes because things are always changing. So you're never going to be able to fix that. That's interesting. How do you feel? Oh, 2 questions. I like the Indiana market. How do you feel about Indianapolis?
Yeah, I think it's been a strong market. The fundamentals make sense there.
Job growth.
Yeah, job growth. Stable population, not a big population growth, but and it's a landlord friendly state. That's another thing that's really important, is being in a landlord friendly state.
Yes, absolutely. And I think the affordability is important, especially in today with high inflation. I think their wages to how much the homes cost are actually, okay, versus California, Bay Area, where even if you have a good tech job, you can't even afford a home here. So, yeah. And then the second question is, how do you feel about single family homes? I know you're a multi, apartment investor, multifamily. So how do you feel about single family?
You don't get the economies of scale that multifamily gives you, especially in a market like this. And one key point around it is, if you have a single family home and you have a mortgage on it that is $2,000 a month and nobody lives there, it becomes very painful to make that $2,000 a month mortgage payment. So economies of scale, I can have a 10-unit apartment building be 20% vacant and I can still make my mortgage payment.
Got it. Have you ever invested in single family?
Yeah, I had a portfolio of 200 at one point.
You sold them all?
Oh, yeah.
Oh. Wait, previously, or like recently, or way back?
No, then? This was actually between that period of time when I left the construction business, went into real estate. After the first couple of years, I started building a portfolio, and
okay,
yeah,
nice. I definitely want to get into, the story of the private equity firm and how it kind of all came crumbling down. Before we do, I want to move on to a segment I call Hella Misguided. Okay. Hella is a Bay Area word. It's not a cuss word or anything, but it's just a Bay Area word and it means a lot. So a lot of us are misguided. In this question, I ask the same question to each entrepreneur and business owner that comes up here. That question is, if you were to write a letter to your 18-year-old self, what would a summary of that letter be?
Go into real estate earlier and go right into the apartment business.
Yeah, I love it. I
For
love it.
real. That's exactly what I would tell my 18-year-old self.
And you want to give a little bit of bullet points of why you would tell your 18-year-old self that?
Yeah. Like I said, I spent a lot of time in the single family side, but you can't scale a single family business like you can a multifamily business. Um, I'll give you a great example. We've just been underwriting, which underwriting is just a fancy word for saying we're analyzing a property, all the financials, to see if it'll work, and if we'll be able to pay our investors a return. But we analyze these multifamily properties, and I was looking at properties that were maybe 70 to 150 units in size. Well, nothing was penciling because the market's changing, interest rates are going up, inflation's growing, nothing's penciling. All of a sudden, I look at a deal that's 200 units, and all of a sudden it pencils. So there's something about the economies of scale. The more cash flow that comes in, the more opportunity you have to pay bills, pay debt, and build wealth as a result of that. And the whole purpose is to help your investors build wealth.
Yes. This is kind of a side note. In your apartment complexes that you buy, have you ever done like a midterm, short term, like where this apartment complex has those in there, or is it only long term?
We own a deal in Florida right now that
Okay.
it's a 40 unit, and we've taken a couple of units in a couple of and Florida's kind of an interesting market because most buildings are either all one story or they're 2-story townhouse type complexes. This particular part of this property has a number of 1-bedroom, single story, 600 square foot apartments. And we have a couple of those right now that we're doing Airbnb with, because we're very close to Busch Garden and Adventure Island, and so the amusement park. So we get a lot of short-term stay there.
Nice. Love it. Yeah, Florida's a good one. I don't know how the laws are there, but I know my business partner, he has like a multi-million-dollar Airbnb company, and he had his favorite was Orlando. He had one in Orlando, and that was his favorite. But
Yeah.
yeah, that's good because I felt like if I got into the multifamily, I would absolutely want to try short-term. Short-term mean multifamily. Cash flow could be crazy. But yeah, okay, cool. Let's go ahead and dive into the private equity again. So can you tell me kind of, the audience doesn't know, but from me listening and reading up on you kind of lost it all that one moment. Can you tell me kind of the fall of that?
Sure. So I built $100 million company back in 2008. Some of your listeners may not remember this or know this, but it'll be in the history books. The world went upside down. The stock market fell. We turned inside out as a country, and we were in the worst economic crisis the country and the world has ever seen. I thought we were in a recession. I thought it would be a 10 to 12 month, or I'm sorry, a 17 to 18 month correction. We'd maybe drop 10 to 12%. That's a normal recessionary period. Well, this thing lasted 7 or 8 years, and the correction was around 40%. So property values dropped, occupancies in apartments dropped, people couldn't pay their bills. There was too much leverage on debt. And I thought, well, let me try and weather the storm. I had 38 companies at that time, and thought, I should have just let some go to foreclosure, but I didn't want any of my investors to get hurt. And I knew that if I let some of those deals go to foreclosure, that my investors would get hurt. So I thought I could save the company. So I started to move money back and forth between profitable and non-profitable companies to keep my company afloat. That was fine. My accountant and my attorney both said it's okay to do that. Just leave a paper trail. But what I didn't do was I didn't disclose it to my investors. And real estate's a very disclosure rigid industry. You have to tell everybody what you're doing at all the times because there's fiduciary responsibility. You're responsible to that individual. So when you take money from someone, you're held at a much higher standard. And because of that, and not disclosing to my investors the movement of their money, I wound up being charged on wire fraud and mail fraud charges and got sentenced to 10 years in federal prison. So I got wiped out, lost everything, including, some of my kids that don't talk to me today. And I went to federal prison in 2013.
Man, that's one hell of a story. And it's just that, I wouldn't say small part, because the communication is a big key in partnerships, right? But it's like, even your accountant was saying how even you can move accounts, right? Which is the good part. It's just that one piece that you got caught up on. And let's be honest, did you know? Like, there was no one sitting here, you need to communicate this. So like, were you misguided, or do you just not know that you had to communicate it? What was that?
The government tells you that ignorance is no reason to break the law. Mm-hmm. So I broke the law unintentionally, but I broke the law, and I take responsibility for that. But it's the fact that I had all this great success. And the other thing that happened along the way, and I really want people to pay attention to this, is that, our egos get out of control. Our pride gets, we get prideful. We lose our humility. We think that we've got the world by the short hairs, and we think that we're infallible, when in reality, we're not. We're all human. We all get up in the morning, brush our teeth, put our pants on the same way. And we, need to be respectful of each other. And I wasn't. And so, I got crushed.
Yeah. Well, how old were you at this time?
I was 52, 53 as this was starting to happen.
When did you see most of your success prior to that? How old were you?
Between 50 and 53. I made $15 million in 30 months.
Yeah. And so that was most of your success, and then it all came crashing down just kind of overnight. How, I know this might be a hard question, but how was the impact on you emotionally at that point?
Terrible. You're always looking over your shoulder. You're wondering what the next phone call is going to bring. Am I going to go to prison? What's that going to be like? What's going to happen to my family? Mm-hmm. You're left with a bunch of questions.
Yeah. Yeah. How long did it take for them to arrest you and take you in?
Yeah. So in 2010, we actually did a voluntary receivership, which means that it's almost like doing a bankruptcy, but we turned our companies over to a receiver to manage all the affairs.
Okay.
Didn't really think that anything was going to happen. That was November of 2010. In May of 2011, they asked me to come in, and I got indicted for wire fraud and mail fraud charges. And there was no specific crime. Mail fraud and wire fraud are very vast.
Yeah. Yeah.
You could actually go to prison for mailing your electric bill to the electric company. I mean, that's how crazy that law is.
Did they try money laundering or no?
No, it wasn't a Ponzi scheme. There was no money laundering, no racketeering, none of that other stuff. It was straight wire fraud, mail fraud. And so I got indicted in 2011, and then it was 2 years of, trying to fight it.
Yeah.
Let it out before I went to prison. One thing I'd have done was probably go a little bit earlier. By the time I got to prison, I turned 55 in prison my first few months. So,
how old are you now? You look younger than I think you are.
They say prison preserves you.
Yeah. The prison food, huh?
No, I told you could ask me anything except what I ate.
Yeah. Oh man. Okay. Yeah. We'll stay. I don't even want to know, to be honest.
No, I'm 65.
Wow,
And
man, you look good.
yeah, thank you. I appreciate it. And I'm very specific about, taking care of myself. I lost 10, 11 years of my life, and need to live to be at least 100 today. So,
Yeah.
um,
Yeah.
gain it back. And I play the game at a different level today, right? Before it was about money. Before I wanted to make $1 million a year, and that was important to me. And today it's just about winning the game. It's got nothing to do with money. I want people to learn and grow and be successful that I can kind of give examples to and direction to. And my story really is one of hope and inspiration that's fueled by success, loss, and redemption. Because we really haven't got to the redemption piece yet. It's all been about this loss. And I built this huge company, $100 million, and it was gone overnight.
Yeah. How the investors and your family feel? Are people still, were some people by your side? Some people kind of cut ties with you? Can you tell me a little bit about that?
Yeah, there was a gamut of all of it. My family stuck by me through till I went away. Thought we'd get through the whole thing. My investors were mad, but only two of my investors were really said put him in prison. Everybody else said, he should stay out because he's worth more money to us outside than he is inside.
Mm.
You know,
You could have made the money back. Yeah, especially in that recovery period after the recession. Yeah.
you just hit that out of the ballpark.
Yeah, they could. That should have been the punishment. Is just you got to work to serve these investors back, like almost like community service type. But
yeah.
Nah. God. Okay. Let's talk about redemption. Now that you are out, you're clean. You're new beginnings. What are you doing? What kind of businesses are you into now? How are you trying to make things right?
So we got to back up a little bit because my redemption started in prison.
Okay.
I went to prison in 2013. Thought my world had ended. Thought everything was over. I was in prison about 3 weeks, and at the time that about 3 weeks in, my wife decided she was going to divorce me and move on. It crushed me. It just ruined my world. The joke in prison was we should take his shoelaces because we think he's going to kill himself.
Oh man, I'm sorry.
So, it was some dark days. I wondered how I would get through today, much less tomorrow or 10 years. And I always tell people, I say, look, I never flew private. I didn't have a boat. I didn't buy a big house. I didn't drive a fancy car. I was the neighborhood baseball coach. I was home every night for dinner. And I got ripped from that lifestyle to live in a 12 by 12 room with 3 men I didn't know, nor did I like, wondering what the hell happened in my life. 6 weeks in, I walk in the gym one day, and not to work out, not to lift weights, not to do anything. I was looking for somebody actually. And this guy walks over to me and he goes, "Hey, look, don't let these people beat you. All they want to do is take from you everything you've ever known. They can take your business, your money, your apartments. They can turn your family inside out, but they can't take who you are and what you're made of. They can't take what helped you build that $100 million company." And, I think we all have these defining moments in our life where the switch flips and we go, we realize something different. And what he was saying, I believed. And he said, "Come to my class every day." I'd gone from running marathons and being 35 pounds overweight and absolutely hating myself. To now this guy's got me coming to this class every day, working out, feeling better, losing weight. While I was gone, I wrote 2 books. I wrote a book called Exit Plan, Your Complete Guide to Multifamily Investing and Why You Need an Exit Plan Before You Buy. I wrote a book on property management. I wrote an ethics course. I taught real estate investing, property management, and ethics in prison for 6 years. I went to college. I got a bachelor's degree in theology. I was on an outreach program. I went into the community. I told my story to small business owners and local college students.
That's awesome.
Yeah, thanks. I met a professor at the University of Minnesota. He and I co-authored a paper together that got published in the Business Journal of Ethics. It gets taught at the collegiate level for forensic accounting and sales and marketing classes. Today I'm home. I came home in 2020, the week they closed the world down for the pandemic.
Hey, that's when I started the podcast. Literally the week. What day did you get out?
March 13th.
Oh my God. I think that is the week, literally the day I started. That's crazy.
That's
Congrats.
fun.
Yours is way bigger accomplishment.
That's a big accomplishment too. I tell people, go get a microphone, start a podcast,
Yeah. Yeah.
But I came home and it took me about 6 months to get my arms around it. I started a coaching business. I teach people how to invest in multifamily apartments, not make the same mistakes I made, how to build a successful real estate business. I teach people, some business strategies, how to strategically build organizations. And I got approved by the SEC to go back and be an issuer of securities and a sponsor of deals. So we bought our first deal last year in December, and are chasing our second one right now. I wind up partnering with some of my coaching clients from time to time.
Oh, nice. That's awesome. So you're one deal in your new beginning. And that brings me to the next question is, where's the market headed? Do you see it like 2008? I mean, are you gathering money right now because opportunities are coming, or are you ready to buy today?
Yeah, we're talking to everybody. We are ready to buy today. I think there's still some deals out there. Mm-hmm. But what I tell people is position yourself today in front of the next bull run, because it's not going to be as long of a fall as last time. It's going to get a little nasty over the next few months, but position yourself today in front of that next bull run, because that's where wealth is created. Mm-hmm. And, you have to remember, we just came out of this really robust time and we're coming down into the valley. There's always a hill and a valley. Mm-hmm. We're going to come down in this valley, but we're going to come out of the valley. And as we come out of the valley, you want to be at the front end of that run, because that's where wealth is created.
So would you say the next 3 to 4 months is like a great time for people?
I think that the next 3 years is a great time for people. I think people should make a choice, make a decision, and get involved, whether you're a passive investor looking for a sponsor like myself to invest money with, or whether you're an active investor and you're going to get your hands dirty and deal with tenants, trash, and toilets yourself.
Yeah. Yeah. I actually haven't dealt with a toilet one, but I've dealt with some interesting ones. So I'm still waiting on that toilet call though. But what's kind of like the minimum you ask for on private equity?
Yeah, I never ask for money. I give people an opportunity to invest and see, returns of mid-teens to upper teens to, also receiving, some strong cash flow along the way. It's an investment opportunity that people can make a decision on their own. We just came out of an opportunity where the stock market went up 27% last year, and this year it's down 28%. Real estate's not like that. Real estate's not going to have those ups and downs where you're going to lose sleep over it. It's a rare occasion if real estate crashes, but it'll never go to zero.
Yeah, that's what I like about real estate versus stocks, is that you can control things in real estate. Stocks is like, obviously you can control when you get in, but that's it. Once you're in, it's like, okay, now if I pull out, I either lose or I win. In real estate, there's multiple exit plans. Shout out to your book. But there's multiple exit plans, and I really like that.
Yeah.
Cool. I know we got a couple minutes. So what do you look for in partners? And what how does that work with you?
Yeah. What I really look for in partners are people who want it as bad as I do. Okay. So a lot of times people say, I want to do it, but their mindset's not right. And so through coaching, if I help somebody get their mindset right, and then they really start to take action and coaching is interesting because it's not about telling you what to do, but it's more about helping you self-discover what you already know and then holding you accountable to the actions. The more accountable somebody is, the more activity somebody takes or does, the more successful they're going to be. I actually just did a tweet today that said, massive action causes massive results. So,
oh, I like that. Let me write that down. Massive action creates massive results. That's the title right there.
yeah.
I love it. I love it. Okay, cool. Well, I know you got to get out of here, so I don't want to take up too much of your time. The way I like to wrap up the episode is with a segment called Guided Conclusions, where I can ask a question that we didn't talk about previously. I know you said you're an open book, but there's some questions I don't go over. It can make you cry. It can make you laugh. And so, yeah, are you ready for this question?
Let's go. Let's roll.
All right. Think of the most creative home that you can build and explain it to us. So if you had unlimited funds, you could go anywhere. Let's take a dive into who you are and what you like as far as hobbies. What would you build in that home?
Yeah, boy, that's a great question.
Thank you. I do this. I do this.
Again, not being money motivated, but I still have a vision for a lifestyle. I'd probably build a 20,000 square foot house on the side of a mountain with the view of the ocean, where I had a theater and I had a place that I could go. I have an indoor simulator for golf. I have a nice master suite that I could go on the balcony and see the ocean, see the mountains. Have a nice. I'm a huge kitchen guy. I love to cook, so I want to make sure that I have a nice stove and oven and all those bells and whistles that would go along with that. And I love open space, so that kitchen would overlook a great room that have a nice fireplace and a great in-home entertainment center.
Okay, I noticed you said the first thing was a movie theater or in-home. So what's your favorite movie?
Top Gun.
Top Gun. Did you see the new one?
I did. Maverick.
Did you like it? I haven't seen it yet. Don't spoil it.
I did like it. But I'd go back and see the first one again, though.
Yeah. Nice. That's awesome. Well, Mike, I appreciate you coming up here. This was amazing. I know it took a while. I think it's been like 2 months, right, or something.
Yeah, we've been trying for a long time.
Yeah. Hey, I appreciate the grind, and hey, that's what you love in partnerships, right? Is grind. So thank you, Mike. Go ahead and let everyone know where they can contact you, how they can find you and reach out.
Absolutely. This has been a blast. Thank you. I'm just looking at the time now going, man, that went fast.
Yeah, I know. I could go on for days. So.
Yeah, people can reach out to me. I love to network. You can email me directly, mike@mycoreintentions.com. Matter of fact, I just put together a 2023 planning guide, a goal setting and planning guide, that if you want a copy of that, email me. I will send you a copy of that. It just give you some direction around business planning and goal setting for next year. I think right now is the time to start to get your mind around that kind of stuff and look towards Q1 of next year. Anywhere you hang out on social media, Instagram, Twitter, LinkedIn, wherever you're at, you'll find me. Like me, love me, and subscribe to my YouTube channel, please.
Like me, love me. I've never heard that. That is amazing. I love it. I don't even think there's a love option on like anywhere.
There's that little heart. There's a little heart.
That's like though, but that's funny. I love it. that shows the maturity in you. I love it. Well, you guys heard it here. This is the Misguided Podcast, where we intend to guide you to a better future. Again, my name is Juwan, sitting here with Mike Morawski. Make sure you go check him out at My Core Intentions. I appreciate you guys. Thank you.